Hey, you like the stock market. What a coincidence. So do I. In fact, this is my reoccurring Monday real life stock review where I look at stocks that you requested and go through the analysis and see what's shaping up. Let's dive in together right now. Hey traders from around the world, it's Jeremy Alexander Newsome with your Monday real life stock review. Got a personal question. Have you ever traded like a wet rag? That's how I trade today. Pretty much sums it up perfectly. Just a wet rag that's just sitting there on the counter collecting mold. Probably got some dirt on it, some mud. It's an old wet rag that no one even uses anymore. You just found it under the sink, under the sink cleaner. That's how I trade today. Wet rag style. Realistically though, going back and looking over the trades, not a whole heap ton of things I could have done differently. I'll kind of go through the trades and look through some other setups, but this particular gap, I actually do like the gap a lot. It is and was a nice bearish gap and go. I didn't trade the SPY actually, so here was the pre-market low. And even though you got your perfect 5-minute high wave candle, and yes, you could have played that bearish, entry here, stop there, and you would have had to exit for an R and some change really early in the morning. This was the new low, right? So it just traded into the new low. It made that pre-market low. That's where all the newbies were hopping on bearish, and that's when we kind of bounced. I was watching the SPY pretty closely, and I did take a bullish trade relatively early in the morning on another position, but we got stopped out of that, and then the SPY actually did run up higher. So it's very kind of bewildering with what the SPY was doing. However, based on today's candle, we got 40 more minutes left until the market closed. A little bit of a high wave. I think tomorrow is going to be a relatively interesting day or insanely boring. If we get an inside candle and nothing happens at all, it's just going to continue to wait and see what occurs. However, if we do continue to break down, and we can, then I'll be interested in seeing if any more bearish plays work out. But yeah, the SPY, nice little bearish gap down. And again, eventually I would just love to see this come down into the long-term moving averages and kind of chop around. Sell in May and go away is the real deal right now, folks. It's happening, and we're down very flat. Most of the move happened pre-market last night on the E-minis. Speaking of E-minis, this afternoon for the futures trade, after market close, I'll probably look for a bull trade. I keep keeping an eye on a bull trade. But what I can say is if we don't really hold this 28.30 level and we do start breaking that lower, then sure, we can look for some bear movement. But if we hold that okay, yeah, then we'll find out. So here's what I played bullish. I had a buddy message me about Micron bearish. So a bearish trade would not have worked, and a bullish trade didn't really work. We'll talk about both. We played long, had another buddy of mine play it short, neither one worked. So Micron, really just over the last few months, not even few months, few weeks, 3 weeks, is down 20%. You had a bearish candle on Thursday, you had a massive gap down, and a bearish candle on Friday, and you had another gap down today. So this was 2 bearish days in a row, trading into a potential support level. This purple line was just a support level that I had drawn. And not only that, but here's the 5-minute chart. And the pre-market support, you'll notice, was right here. These two candles had a tweezer bottom, low of 34.54 and 34.54. So the first candle that came in was a high wave candle. Second candle that came in was also a high wave candle that had exactly the same high. So we had a tweezer top. So our entry was here and our stop was down there, and we got stopped. We got entered and then we got stopped out. So if you played it bearish down here, you got stopped out. If you played it bullish up here, you got stopped out. I wouldn't have played it bearish just because, again, I thought it was a little bit too overextended. Trading into that support, risk-reward really wasn't that great. Tried it long, and it didn't work out. Oh well. Sometimes those things happen. So that was wet rag status number 1. And then number 2, Tesla. I actually really did like the bearish continuation on Tesla today. A lot of blood in the streets right now on Tesla, and very excited to see if people do start buying it down here. If Tesla closes like this candle today and gaps above the high tomorrow, or closes above the high tomorrow, we could get a little filling of this gap. The interesting thing is the 100 simple moving average on Tesla is at 189. So my thought process is either we bounce exactly where we are now, or we're going to go a little bit lower, like into the 177 region. That's really my thought on Tesla. We either bounce pretty much exactly where we are today, but if we take out today's low, since it has that nice little lower shadow, I don't really see any real reason for us to slow down until we get down to that 100 simple, which is 189.30, and then maybe even a little lower than that, just to make sure everyone's nice, furious, frustrated, and trapped on Tesla around 170, and then it bounces. We shall see. But longer term, love the company, love Elon Musk, love the vision, all of that thing I jive with. We'll just have to see what happens. Keep in mind that Tesla is down 50% right now over the last year and some change. It's a big move, and there's a lot of shorts in Tesla. Tried it again because the short that we played worked so well on Friday. Wanted to see if a continuation was going to happen. Had a pretty loose stop, and here's kind of the play on it on Tesla was right here. And again, looking at it, it does look too easy, but I figured, you know what, I'm going to try it, and we tried it. Here's your bullish candle, bearish candle, strong bullish candle, good volume. Figured if it took out that low, it probably will continue a little bit. Another bullish candle, right? Here's your evening star reversal. There's the breakdown. There's the reversal. So an immediate breakdown, an immediate reversal. Once it came in contact with the 10 EMA, here's where I should have flipped the position onto the long side, was right here. After this hammer comes in, after a big, strong, bullish volume comes in right here, inside candle, should have flipped once that popped. So gotten out bearish, which I did, so we got out bearish, but right here I should have flipped bullish, gotten in bullish with a stop down here at 197, and would have made back that loss and then some. Actually would have been a pretty decent trade. Wouldn't have been megalithlically magnificent, but would have been able to get about an R and some change on Tesla. Would have been able to make that back. So I'm going to go back trade Tesla a lot tonight, but that was the bear breakdown that just simply did not work, mostly because Tesla is pretty extended right now on the daily time frame. So then Pinterest, P-I-N-S, Pinterest was actually up this morning a little bit, which was interesting because most of the market was down. So Pinterest was up, and I was thinking, okay, well, since it's up, maybe we can get a little bit of a bounce. I was actually quite happy on the trade on Pinterest because even though it didn't work out, I'm glad to be out because it did go down a little bit lower today. But here's your double bottom pre-market. It broke above, it retested, and we went long, hoping that it would continue higher, and the hope did not work on Pinterest today. Pray as you might, Pinterest went lower. So the 5-minute charts, we got in on a pullback here, and our stop was way down here, and I bailed when this candle came in right there. Got out early, just wasn't working, traded sideways a lot, took the small loss on Pinterest, and Baidu. So the good news is all 4 of these trades that I lost on did not lose more than 3 Rs. So that was, that's kind of my max loss for the day. Last Monday, I did lose that 3R max loss limit, and this Monday I did not. So the thing is, there are and there will be some days when you trade that you just feel like you're an incompetent, absolute jagaloon and you can't do anything correct. Today was one of those days for me. However, the good news is there will be another market opportunity tomorrow. Someone told me once that the U.S. stock market's open pretty often, and tomorrow I will be looking for other trade opportunities. I'm not going to try to swing for the fences and get all of the losses that I had today back in one trade. Just going to take it slow, take it steady, maybe make an R tomorrow, maybe make an R on Wednesday, maybe make an R on Thursday, and then Friday, we shall see. If I can make back more than I lost, then mathematically I will be profitable. Baidu, again, very happy with the stop loss. It just did not work. You had a nice rally, you had a nice S-curve, you had a nice break higher, and so I bought this pullback with a stop down here, anticipating that to happen, and it just did not. Baidu kept getting wrecked. So bottom line, increase the stop to here, and then we got stopped out for about 0.7 hour loss on Baidu. Down 8% on the day, just getting shredded. Speaking of getting shredded, 3M, there's a few people in this bull put spread, which is magnificently underwater. In fact, it's entirely underwater. I'm at my max loss on this 175, 170 bull put spread. The silver lining is the trend is done on 3M. It's broken. There's no support on 3M at all. Nothing here until 150. So my plan on this one is just to find some kind of pullback, like a bullish candle, a retest. I'm not going to unravel right now because I'm already at the max loss on 3M. Should have gotten out, I guess, when it closed below the low of May 6th candle, but I figured it would trade down to 176 and then bounce. Nope, dead wrong. So this spread has an entire month left before expiration. So what I'll be doing is on a retest on an hourly chart, more or less holding that retest and seeing if we roll over, buying to close the 175, which will cost some cash, holding on to the 170. And at that particular point in time, if the 170 is in the money, that actually will work out my benefit, because that means that if the stock does continue and roll over lower, then that trade could work out nicely if it does. So 3M, unbelievably strong bearish trend right now after this gap down on earnings, just getting totally smoked. We'll see if there's any kind of pullback at all on 3M. Xilinx. So Xilinx today pulled down into the 200 simple moving average. In fact, the low of the day was pretty much the exact low of the 200 simple moving average. The only way you could have played it is you would have pretty much had to buy right there. So at the 200, you would have had to just go long right here once it made that new low of the day. And if you did that, it would have worked out nicely for a little bit of a bounce. Realistically, though, I'm very happy with the pullback. It needed to pull back, and this is a super strong gap and go on earnings. And as you can see, it did gap, and it did go. Xilinx finally pulling back. You had a one black crow last week, high wave candle today, and very similar to a few of the other stocks out there, you're at a very good support with this really nice gap and go from the earnings back in January. So if this support gets taken out at any point in time with a close below that level, keep your eyes on Xilinx to go lower. Otherwise, watch this level very closely, as something like this could easily occur, and this is going to be a decently strong support on Xilinx. For how long, I do not know, but if you're looking at going long, this is definitely the area to start considering that. Here's Square. Square, not doing anything at all. Perfect high wave candle, chilling, nothing exciting. Facebook, same thing. Microsoft gaps down, small bullish bounce today. And Apple just getting absolutely smoked with this bearish gap and go. And realistically, the only thing holding up Apple is going to be the 100 simple on the daily and the 100 simple on the weekly. I'm very bullish on Apple long term. However, you had a bullish high wave candle last week on Apple, and we've already started taking out that low with a gap on a Monday. So I'm thinking Apple is going to have a little bit lower lows left, which is beautiful and gives tons of people loads of buying opportunity, because there's no way Apple's just going to do this without doing something like this. Just a natural wave rotation. So allow Apple to pull back. It's going to chop around for a while, bounce around in between these long-term moving averages, hang out. But today's gap on Apple is not bullish. And if you're in some shares, you could at least consider having some protection and watching closely those levels. NVIDIA, shout outs to Robert Falco, who we featured on Friday's stock review with Baidu. And he did again, ladies and gentlemen. He faded NVIDIA bullish. Entry was here, stop was here. He exited a quarter of his position there, and today he got out at the top of the move. I think his exit was 154.70. So he took his lesson from Friday. That lesson was look for barely a break above the high of the day and then exit. So the high, previous high was 154.75. The new high was 154.77. He got out there, and that's when a lot of newbies got in bullish, only to get absolutely hosed. So Robert Falco, congratulations for making money on Nvidia. Bullish today. Very well done, my friend. Other than that, I have another review coming out on Wednesday. So if you have any stocks that you want me to look at, put them in the comment section below. Message me on Twitter, StockTwits, email me, however you want to get a hold of me. Happy to look at whatever it is that you're interested in. And number two, keep your eyes peeled. Look in the description box in this YouTube video, or make sure to check your email. 8 p.m. Eastern tonight, I'll be interviewing Mr. Ricky Cadan, who took my R's from me on Micron. So where I got in bullish, he got in bearish. Let's talk about his trading strategy. Let's interview him and also discuss the real-life trading plans and goals for real-life trading in Australia. So if you are in that time zone, the Australia, China, Hong Kong, Philippines, Indonesia type of time frame, then make sure to join this webinar or watch the recording that will be at 8 p.m. Eastern tonight. Live webinar. Recording will go out later tomorrow so that you can get some insights on potentially trading with Ricky in the future on your markets and on your time frame, time zone. I'm loving it. Let's continue to introduce lives together, folks. You rock, and until then, love life, live life, and trade it. I'll see you later. Bye. All right, friends, that's it. Your Monday real-life stock review wrapped up, finished, cooked, baked up at 450 degrees for your mentally delicious brain food. If you like that, make sure to click that beautiful subscribe button. And if you like this video, there's plenty more where it came from. Click that button right there to watch more. You rock.